Hello and welcome to Hot Commodities. I'm Manisha Gupta and the top headlines on the show are: the gold prices hold on to small overnight gains as sluggish US retail sales data and geopolitical tensions boost the metal safe haven appeal, although higher stock markets put a floor on the rise. The global demand for gold in the second quarter of 2014 declined by 16% year-on-year to 964 tons as consumers and investors pull back and consolidate their activity. The crude oil prices fall below 103 a barrel after briefly bouncing off a 13-month lows on ample supplies and concerns about weak demand. And in currencies, the Indian rupee gains on the back of dollar sales by importers and firm equity markets. The rupee shuts shop at 60.76 to the dollar. Hi, let's start with the crude prices, which are hovering around 13-month lows at 103 on your screen, 0.7% of a decline coming in for prices. There is a supply glut in Atlantic Basin, which continues to put pressure on the prices. There are high output coming in from most of the US and Middle East as well. The gold prices in the meanwhile are holding on to their small overnight gains as sluggish US retail sales data and geopolitical tensions boost the metal safe haven appeal, although the higher stock markets have put a floor on the rise. Well, the global demand for gold in the second quarter of 2014 has declined by 16% year-on-year to around 964 tons as consumers and investors pulled back money and have seen consolidation in activity. The demand for the yellow metal stands at 1148 tons during the corresponding quarter in 2013. The global jewelry demand, which represents more than half of total global demand, was down 30% year-on-year to 510 tons. In the value terms, the global demand for second quarter is down by 24% to $40 billion compared to second quarter of 2013. So we have seen quite a bit of decline coming in for 2014 consumption numbers. Som Sundaram PR, he is MD World Gold Council, and he joins us on the show explaining those latest numbers. Som, hi, welcome. The second quarter demand shows decline globally and for India also. How do the numbers look to you?
Quarter of 2013, if you recall the huge price drop and the way the gold was bought across all countries and in India last year, same time. So this was a huge base. Against that, it is down by 39%. Both jewelry and bars and coins have actually come down. Overall demand globally as well is down 16%. We believe that the demand across the globe now is tracking a longer term average, because while 2013 was an exceptional year, the current quarter figures, if you compare it to 2012, they show 11% growth. So it's tracking a longer term average, and this is perhaps the new base.
So the global demand has declined, as you said. Would you say the sharp cut is really coming in for the decline in Chinese imports, down 52% as your data shows?
Absolutely. India and China have contributed to this significant drop, certainly, and and certainly China. China has indeed dropped by 52%. So yes, India and China have contributed to this drop.
So also, how would you look at the Indian markets, as you pointed on that one as well, and there's no change in Indian gold reforms? Do you see that putting further pressure?
Yeah, but they have all stated that these curbs have to go, including the Reserve Bank have made clear statements about the fact that these will not stay in the long run. It's just a matter of time, and they have also stated they would like to take a longer term view after looking at what is happening around the globe and oil prices and things like that, which is very understandable. But we should not forget that they have taken some step towards allowing star trading houses and premium trading houses to import, just eased the official supply a bit as soon as they came to power. So I think the steps taken are very measured, and I believe that whatever change they do will be there for the long term, which is good for the industry.
So also, what's your sense now for the Indian imports for the calendar year 2014? You have said 1,000 tons also in the past. Are you sticking to that?
We had earlier stated it could be 900 to 1,000. We have now revised the full year estimate to 850 to 950 because we are after the budget and the fact that these curbs are still in place and we don't have an expected date when they would be removed. We believe that 850 to 950 represents a fair estimate for the year 2014.
A final question then, Soman, an overall view on the policy, price and consumption on a longer term, how does that look to you with India's perspective?
I think longer term, India will integrate gold with the mainstream financial system and, it's a huge employer as well and we cannot ignore that fact. We will therefore be seeing quite a lot of activity that probably brings the trade more into the organized, more organized sector activity in this market. It's a huge market, $45–50 billion industry. So I think it cannot be ignored. So our long-term view is gold will play a very crucial role in the savings wallet as well as in the formal financial sector.
Fair point, Som. We'll let you go at that. Thank you so much for joining us and explaining the second quarter numbers to us.